Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for April 10th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Nothing has really changed here over the last week or two. What I mentioned before is that we're trading right at the center or the apex of this developing range here, and we're right at the midpoint, 53.25, 54s, which is the previous low. We're right at that 53.54 point in that zone right there, and it's very difficult to initiate a trade around this area because it's kind of an HVN. It's a pivot here, and right now it's just kind of a battle zone. So it's not really, you're not seeing a whole lot of movement away from this level just yet. Every time price rolls down, it comes back, rolls up, it comes back, and for the most part, price is trading neutral to the key range. So again, that means that we could be looking at significant expansion ahead. I still believe overall the trend and the bias is to the upside. So even if price were to push down into this LVN, I still believe it's a great area to look for bulls to defend and trap and bring it back up toward new highs. This thing is still bullish. I still believe more highs are coming unless price breaks back below 2300 and cannot reestablish acceptance above 2300. But for right now, any pullback into this zone or shy of it, likely a buying opportunity back to 53s with a shot at breaking new highs into 2400 and beyond. So if we take a look here at the intraday time frame right now, again, prices kind of chopping around that 53.25 level, and you can see this is the range from last week here. Here's the impulse high, the impulse low, you have the midpoint, and now you have price trading around that area. So this is still the key range to watch. Fading the edges could provide additional opportunities as it already has here, but really you got to be careful being chopped up in this area. Look to fade edges, new highs, new lows, etc. Until we see decisive action away from this 53. All right, let's take a look at ZB. Higher time frame ZB right now shows that we could be at a major pivot in the charts. Friday in the room, we could tell that this was a significant day building, and it turned out to be even more significant once price really pulled back off that zone. You can see here, in terms of a continuous contract, kind of modest lower highs or thereabouts. But if you look at this in terms of the front contract, the M7, this is just beyond previous highs. So however you look at it, this is a major rejection tail here. Significant rejection day that we look for. Midpoint comes just shy of the 52.12s, 152.12s. So any pullback into that zone could be rejected for a shot at pushing price back toward value, which is 149.24, and perhaps pushing this thing to new lows in the current existing framework of this range. At the very least, recent lows would take you right into 147.12. So right now, if this is the rejection tail or day that we think it could be, then there's enough energy here being built up that the failed range expansion to the upside could unleash itself and return this thing back down toward value and below. So that's something I'll be looking out for here in the days ahead. And if you look at the intraday chart right here, you'll notice how price sold off sharply. That was Friday morning. And then right here off to the right is where the absorption signature built out. Early on and then a little lower, and it came back and got it again before dropping sharply. So that's a very important level. You can see the LVN here above it. So 152.24, very, very important. Any bounce could still be seen as a selling opportunity for a likely continuation to the downside in ZB. Now if we take a look at gold, you'll notice in gold we've also gotten a significant rejection as well. The previous session we had a move up. We talked about price squeezing above 12.0520, and a squeeze here opens up a move back to value, followed by a move to the higher value here, and that's 64.9, which is the top of this impulse range. We got that move finally, and then Friday finally pushed through 64.90 and then rejected hard. So right here, that's the previous week's high. Ended up closing well below that level, closing into 57 halves after trading as high as 74s. So a major rejection indeed up there. Got as high as 73.30 actually. So the idea is another rejection day here beyond previous highs, and any return to or as high as 64.90 to 63.20, any return into the zone could still be a selling opportunity for a push back to 12.3210, followed by a move back against the range toward 12.05. So right now we could be looking at the beginning of what could turn into a larger move down the road. It's all dependent on 12.40 here. Bears are looking to defend any rotation. First shot at breaking stops through 12.40 and pushing this thing perhaps lower on the next swing move down. Now if you look at this thing here, I talked about before, gold has a range that's formed over the last throughout the year and over the last several months. And here's the high. Rejecting that high would bring this thing back down into the range, kind of like what we've seen before, and then price would come right back up and perhaps attempt to push higher in the next period of time. So right now, we could be looking at a change in direction. Let's take a look at the intraday time frame. Here we are. On an intraday basis, again, the key level that we talked about Friday that gave us the advanced warning was 63.20. So I said 63.20 is current support, but the sell stops are below. And so we got one more push into that area during RTH, which paid pretty decently. And then boom, once the stops came out, it's been a continuation lower. So breaking below our 63.20 was very important. And now you're seeing that pullbacks are forming lower highs, and bears continue to establish new lows. So this is very important here looking forward. The expectation is for all pullbacks to be sold. You can see the previous week's close being defended here as well, and price now below the previous low. So that would indicate a continuation, at least toward 12.40 here. Perhaps not today completely, but perhaps over the next day or two. All right, let's take a look lastly at silver. Here's SI. Again, we're getting a little bit of a theme here with ZB topping out, GC topping out, and then we're seeing gold also shows signs of rejection. So major engulfing day here off of recent highs around 1840. Price failed to hold above the key level of $18. And then you can see right here in overnight trading today, also pre-market, bears are defending the previous week's close, and we're also below the pivot range. So any bounce, even Tuesday, into the pivot range 18, 1810, 1811, could still provide a selling opportunity for a shot at returning price to composite VPOC at 1728. You can see, very similar to gold, that after the bounce we've established a range here, and if this is a rejection at the top, you would anticipate a move toward the bottom and then perhaps a return back up after that sell-off occurs. So right now we could be looking at a flow downward. So any pullback shy of 1820 could still be a selling opportunity for a push back towards 17s and 1728. So that's what we'll be looking for in the week ahead. Any break back above 1820 negates that, and you start to see a major test of that 1850. So right now the flow is to the downside in ZB, GC, and SI. We'll see where direction takes us in ES as it continues to coil around the apex of that developing range. All right, that does it for today's pre-market report. A quick announcement: be on the lookout here. We do have a calendar of events that's coming out for our PivotBoss Masters, and a look at the tools and training for PivotBoss Masters in the week ahead. We'll be sending out announcements for that later today and throughout the week. All right, that's it for now. Let's see how this plays out heading into the rest of the week. Good luck, trade well, and happy Monday.